got Makwe Masilela of Makwe Fund Managers, who's been watching today's markets and joins us for the latest. Thank you very much for your time this evening. Makwe, let's start with the overall markets. I mentioned, you would have heard in my intro, that the JSE is starting off the trading week on a little bit of a bad footing. Obviously, it's what we're seeing in Russia and Ukraine, but locally we did see the financials and the industrials weighing on the JSE.
Afternoon to you and to the viewers. Yes, indeed. And remember, the JSE, just like the UK markets, the FTSE, which was also down compared to other European markets, I think we're playing more of a catch-up, reacting to those bad economic numbers that were released yesterday from China. We've seen that Chinese PMI numbers, both for manufacturing and service, were down. So we had to react to that because other markets did yesterday when we closed. And also with Fitch itself, saying that they're downgrading the GDP when it comes to China's 2022 growth. They expect it to grow at least now by 4.3% from 4.8%. That itself also had an impact on our markets. But yes, it's more of all those geopolitical tensions. And also markets will continue to be on the edge because we are all looking forward to the interest rates. This week we've seen Australia increasing much more than expected. We know that tomorrow we've got the Fed, and we know on Thursday we've got the Bank of England as well.
No, absolutely. And then, of course, the local unit, I mean, it's under 16 Rand against the US dollar, but remains at very dangerous territory, Makwe. And I wonder, is it just an emerging market currency story just because of what's happening globally, or is there something particular about the Rand that's putting it under pressure?
The rand has just been mainly driven by what is happening with the US dollar, which has been going up. As we've seen, the US Treasury is going up when people start to expect aggressive interest rate hikes coming out of the US. But the rand itself, remember, it's a commodity currency. And then when we see commodity prices go up, the rand tends to benefit from that. And I think today as well, for the fact that we've seen a very strong recovery, it did manage to get some support as well from the Australian dollar, which is also a commodity currency, which went up much more than we expected after that interest rate increase. But what's important, we all need to note that it's unlikely that all these central banks, as much as they want to tame inflation, chances are they might spark a recession.
No, absolutely. Some company news out today, Combined Motor Holdings, they had indicated that they were looking at a strong recovery in its results, and that's despite global supply issues. You'll remember we also had chip shortages. I mean, what did you make of the numbers that they put out today? Quite impressive, given the current market that they operate in.
Very good set of results, I agree, and we've seen that with Motors as well. Remember, Motors interims, they've seen their profits jumping by 51%, dividend per share up almost 71%, and the same thing gets to be repeated when it comes to Combined Motor Holdings. They expect their profits to go up by 117%, dividend per share to increase by 135%, and we've seen their revenue going up by 30%. And as you said, as much as we know that interest rates are going up, unemployment is high, but those who can afford it, they continue to buy those cars, and we think it might continue because we see some nice offering, especially when it comes to the entry-level vehicles.
No, absolutely, Makwe. We have run out of time, so we're going to have to leave it there for today. That is Makwe Masilela of Makwe Fund Managers joining us to wrap up the business day that was.